Every time you make a card payment, an algorithm is watching you and the people running it are making billions. Hedge funds no longer look at balance sheets alone because they already know what you will buy tomorrow. In 2013, one company began collecting shopping data from supermarkets and predicted grocery company revenues before the quarter ended. This process is called alternative data, and it is now a billion-dollar industry where your spending habits are bought and sold. You think you are shopping anonymously, but your card number, location, and purchase time together create a unique signature that is nearly impossible to erase. A hedge fund manager admitted in 2019 that they tracked the number of cars in parking lots using satellite images weeks before earnings reports. Phone carriers collect billions of location points every day, and those who purchase this data make investment decisions with remarkable precision. Big data analytics tells hedge funds not only what has happened, but what will happen, making it an entirely different paradigm from traditional financial analysis. In March 2020, a number of funds reduced their positions before the market downturn by monitoring hospital parking data. E-commerce platforms reveal which products are seeing rising demand, and funds take positions based on that growth before the market moves. Credit card companies process trillions of transactions per year, and those who see opportunity in this data are years ahead of ordinary investors. Data broker companies know which websites you visit, which ads you click, and what time of day you shop, creating a complete financial profile of you. These profiles are sold in bulk by sector, and funds receiving these signals begin taking million-dollar positions accordingly. All of this data collection is considered entirely legal, because when you accept terms of service, you have often also given permission for your data to be sold. In 2018, a major data protection regulation was introduced in Europe, placing serious restrictions on data brokers, but the alternative data market continued to grow regardless. The alternative data sector in the American market grows by more than 20% every year, with more than 300 providers serving major funds from around the world. There are algorithms that analyze what products people are writing positively about on social media, and this sentiment analysis directly influences fund decisions. Job postings on professional platforms are also monitored because who a company is hiring says a great deal about its future strategy. Tracking patent applications is another form of alternative data because which technology a company invests in can be seen from its patents months before any announcement. A decline in cargo volume at a port is an early sign of trade weakness, and investors who read this data in time are always ahead of competitors. Even weather data is used by major investment funds because drought in agricultural regions directly affects food prices and commodity market positions. It is artificial intelligence systems that bring all of this data together because human analysts cannot process data at this scale within seconds. The key question is whether this advantage makes the market unfair because a small investor can never gain access to data that large funds use every cycle. But this system also teaches you something because big data shows which sectors are strengthening and which are weakening, and these signals are available to anyone. Open source alternative data is growing steadily, and an individual investor who reads government statistics, customs data, and patent disclosures correctly can gain a serious edge. Search trend tools show changes in product searches in real time, and a rise in searches within a category is a sign that demand is growing. Consumer data is essentially the heartbeat of the economy because when spending falls, the economy sends a warning, and when it rises, opportunity is created. The reason major funds spend enormous resources on data is because a 1-week early signal can represent millions in returns. As an individual investor, you cannot fully copy this game, but knowing the rules and understanding what drives market movements leads to calmer and smarter decisions. The new level of financial literacy is data literacy because understanding which data drives what is the core skill of today's investor. Big data finance is now taught as a separate course at universities, where young analysts learn data engineering alongside traditional finance. Crypto markets are not outside this trend either because blockchain data is open and on-chain analysis has become a field of its own. In the future, the data advantage will grow even further as artificial intelligence accelerates the process, and structures that control data will also control market power. As people begin to understand the value of their own data, the system is forced to change and the demand for transparency is already rewriting the rules. In the end, data is not the new oil but the new power, and everyone who understands this begins to look at the financial world through a different lens and make smarter decisions.